Good
Hello,
afternoon, everyone.
yeah.
So we welcome you at our live webinar, How to Manage Your Portfolio During Volatile Times. Thank you for joining us. My name is Anastasia, and before we start, I will give you some guidance on the platform. And first of all, I would like to check if everything is fine with the sound. And if you hear me and all is fine, can you submit plus in the Q&A box?
Hello. 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 Can I hear? Can I start? Okay. Should I start?
Just some tips. The layout of the screen is not fixed, and you can arrange the position of windows if you want. Also, you can change the size of windows or minimize them. In the bottom, you can see a toolbar that reflects the windows on the screen, and if you minimize the window, you can bring it back from this toolbar. If you have questions to our speakers throughout the webinar, you can submit any of them via the Q&A box, and we will try to answer them after each presentation. If you have other queries or you would like to receive more information on our solutions, send us an email by clicking the add sign that also can be found at the bottom bar. We also highly appreciate your feedback about the webinar and on our short survey that you can access during the webinar, and that will pop up in the end. Our webinar will not exceed 1.5 hours, and we hope you will have a great experience with us today. So we have two speakers, and let me introduce our first speaker, Chris Livadas. So Chris, the stage is yours.
Good afternoon to Istanbul and Ankara and to all other places that have joined us. My name is Chris Livadas. I'm investment management proposition sales for Turkey, Greece, and several other CE countries. So today I will show you how we can manage an equities portfolio during volatile times. What happened was that 4 years ago, our management asked me to set up a model portfolio of equities, US equities, with benchmark using the S&P 500, with a long-term orientation, and we will monitor from time to time. And now it's a good opportunity with this major market impact of the coronavirus crisis to take a look using our tools, either top tools like DataStream or StarMine or Icon, to see how this portfolio is impacted, how it is its performance, how we can optimize it, how we can prepare for even worse scenarios, and eventually how to decide which equities or bonds to add again. So let's start with a very high-level view from DataStream, where you can see here in the gold bars are the corona cases around the world, and the red line is the S&P 500. So as you know, obviously, S&P DataStream combines all the national and international statistics. So we have a database from the Central Bank of the Republic of Turkey, from the Fed, from all over the world, from International Health Organization. So this comes from the International World Health Organization, and the S&P 500, which is my benchmark. So you see that my benchmark dropped about 30%. In around the 23rd of May, and then it rebounded somehow. So therefore, this is a first signal for me to start going back to my portfolio and see what's going on. Another signal is that I can see from Icon the various market impact in several countries. So you can see, for example, some stock exchange indices were hurt even badly, very badly, like CAC 40 or FTSE 100. S&P 500 still is around minus 13%. So let's see on what we have on hand. So almost 4 years from now, our management said, okay, Chris, you get $1 billion, of course nominal, not in cash, to set up a portfolio, long-term equities portfolio using S&P 500 as a benchmark, and you need to select on your own which stocks you need. So therefore, at that time, I decided to use the StarMine Analytics suite that we have, where from the StarMine Analytics, you can select several data related to fundamentals, to estimates, to momentum indicators, and trying to do a completely sector-agnostic search on US stocks. I decided to select the analyst revision momentum model, which is basically ranking the stocks according to how popular they are with the analysts, the earnings quality, where it focuses on the cash flow management, accruals management, and stability of earnings, and the price momentum. So that was 4 years ago. So I ended up with 20 stocks, completely agnostic. So you can see Domino's Pizza, for example, which is everywhere, or McDonald's, or Equity Brands, or Adobe, or Alaska Air, completely different companies. Based on the realization, I divided this $1 billion according to the relative capitalization, and then I just uploaded this Excel into my portfolio. And in this way, I can monitor my portfolio. Ever since out of these 20 stocks, once was delisted and I sold to others. And I can upload the transactions and go to a specific day to see exactly what is which are the positions. So therefore, I used at that time the earnings quality and the price momentum, but we also have a continuously expanding array of models, of smart models, in order to enable the investment managers to do very well-educated selections of companies. Of course, now let's go to monitor the portfolio. Where do we stand? What did we achieve so many years? Were we destroyed by coronavirus? Let's see. So here in the portfolio overview, we notice that we outperformed the S&P 500 from the middle 2017 to April 2020. So the red line is the S&P 500, the blue line is the fantasy portfolio. So funny enough is that although we had some good, we were more or less tracking or a bit lagging the S&P 500 until the middle of 2017, after the middle of 2017, we continuously outperform the S&P 500. Even during the last crisis, we didn't go worse. We did better, actually. Of course, there is room for improvement. Our standard deviation is less than of the one of S&P 500, and our performance is generally better. So let's dig more to see where we are doing well, where we're doing badly, and where our real risks are. So going a bit more into some statistics generated by our Icon platform, we can see that, yes, we do have a realized alpha of almost 6%, a realized tracking error of almost 6%, a lower standard deviation. And we consistently outperform the index. But we need to go into further detail. So we need to find, we see the active risk that we run, so we are better in standard deviation. This is Standard & Poor's, this is our portfolio. The realized tracking error is this one, and this is the R-square. So we are not 100% aligned with the S&P 500, we are about 83.6%. Obviously, since our selection of the stocks at that time in 2016 was based on market cap, McDonald's and Adobe and Baxter and Domino's, you see all of them completely different companies. Everybody knows these companies. Baxter is pharmaceutical, for those that they don't know. All the other, everybody knows. So due to the fact that this is where we most put our portfolio, let's say more than 60% was in these 4 stocks, obviously this is where our risk is there. And we need to examine now both the performance of these companies to our portfolio performance, but also the risk exposure that they generate. So going into a bit further detail, we go here to see the contribution by stock in the absolute performance and contribution of each stock in our portfolio. So we can see, for example, that McDonald's, despite that it's a big weight on the portfolio, did well in the last 4 years, but not as well as Adobe, which has a relative smaller weight, but stellar performance. Or you can see Domino's. Domino's, it seems that everybody is consuming more and more pizzas these days. It's doing even better. On the other hand, of the bottom performers, you can see companies that when we selected them 4 years ago with very good earnings quality, with very good prospects by the analysts and good price momentum, like Acuity Brands. Acuity Brands is producing lighting systems for buildings and LED systems and so forth. It had a very bad contribution to the portfolio. Alaska and Southwest Airlines were the darlings of the investment banks at that time in the United States, and they had very high ratings by the analysts. And for obvious reasons now, due to the corona crisis, these were affected. So you can see that in some areas, yes, our portfolio may look robust, but there are some very dangerous holes that we have to manage. So overall, still we managed to have a difference of 32%. So we are still on a cumulative basis over the last 4 years, we're still doing better. But there are some risks there. So if we want to go one more step and see, okay, let's see what is we did some selection approach at that time. So we can see the selection effect by stock. We notice, for example, that Adobe, we were more successful with Adobe. With allocations, since we were sector neutral, doesn't make sense in this portfolio, but for selection effect was basically due to Adobe. So therefore, if you go now to this part of the slide, you can see there those areas where we are suffering because apparently it was a bad selection effect, and where we are doing great. So here is Adobe, and here you have Acuity Brands, Southwest Airlines, etc. So therefore, during our internal discussion in the investment committee, we say, okay, we have either to decide to get rid of Acuity Brands and Adobe, and Alaska Air and Southwest, and find new stocks, or do nothing because we will obviously may sell with losses there, and try to improve our portfolio. So let's try to see another look at our portfolio. So, okay, we have not decided yet what to sell or not. Then if we create a report where we have the 17 companies that we have now, because one was delisted and the other two were sold in the past, so we can see that we have here the various stocks that we have with their weight, the dividend yield, and so we compare here our portfolio with S&P 500. So we have a lower dividend yield by a higher trailing price to earning and a much better 12-month forecast for price to earnings. So we still, the estimates that we have from the brokers feeding our Icon platform show that still our prospects are good. So you can see higher price to book, higher price to cuts, and most important, higher PE forecast. Now, the question comes, okay, Chris, what may happen, though, that if S&P 500 tomorrow has another 30% drop? So due to our cooperation with MSCI, who is our partner in that system, we use the MSCI risk matrix methodology, where we can create scenarios, various types of scenarios. You can just go here and select several scenarios. So here I selected a scenario of 30% drop in the S&P 500. So the current value of our investments is 1.3 billion. So therefore, the system creates, let's say, a 30% drop scenario and calculates the value at risk that we have at this level. So how much we expect to lose in terms of our portfolio value of 1.3 billion if S&P 500 drops by 30%. So the value at risk that is calculated is $100 million. And the first thing that I notice is that we lose more than $36 million from Adobe and more than $31 million for McDonald's. You can also create different scenarios, like, let's say, Brexit crisis or Gulf crisis or whatever. It's up to you to customize your scenarios. So, therefore, we have to think how we can improve that during our investment evaluation process. So, one way to do it is with, let's say, a more artificial intelligence, more automatic way, and the other with a semi-automatic way. If we start with the automatic way, let's say, again, MSCI Barra, the Optimizer module is also available upon demand to our customers. And what we can do is that we can create scenarios. So I go to the investment committee, and the investment committee says, okay, Chris, so far the portfolio performed quite well, so we don't want to pull out of the market. We are still resilient. We made our scenario for minus 30%. Yes, we may lose $100 million, but what we want now is not more risk. We want to add another $300 million and create a scenario where we will select stocks that solidify our portfolio. We'll not go to increase our performance. Our performance is fine. We have to make sure that if S&P 500 goes down tomorrow, we don't lose 36 million in a day. So therefore, we need to find some more defensive stocks, if you like. So therefore, the system is quite advanced. So based on our selection, there are scenarios. So here I use the scenario that I just want to minimize risk and put another $300 million in the system, in the model, and without changing anything else. So I'm not selling Alaska Air. I'm not selling Southwest Airlines. I'm not selling Acuity brands. I will stay put there, but I will try to improve it. So the system, using the profile that we have, is generating scenarios to buy 4 stocks and also keep $60 million in cash. And to my surprise, I don't know all these companies. I know Lockheed Martin, which is, everybody knows, has a very long line of production of F-16s and F-35s and other government contracts, and Otis, which they're almost a monopoly of elevators all around the world. So this is, let's say, one way to optimize your portfolio. You have seen your risks. You have made an adverse scenario of minus 30%. You know where you're losing, but it's up to you if you want to get rid of Alaska Air or not. And this is a way to optimize it. So put more stocks, more heavy stocks, more defensive stocks to make a less volatile portfolio. Of course, you can always select here a scenario that you want to increase returns. So maybe if I wanted that type of scenario, maybe companies like Netflix may come, or like Gilead, whatever. Of course, there is always the more standard way, because in investment management, it's not a real-time process. We're not traders. We work systematically and long-term. And that's why we will go back to our high-level tools, like DataSim and StarMine, to see the big picture again. So going back to the big picture, now we have a different view from StarMine. Here we put all the analytics of StarMine together, and we can go and see for all US stocks from a mid and high level of market capitalization, large and mid-cap capitalization, I didn't put anyone, by sector, and we have the forward valuation metrics. So we have here several estimates generated by the system, like price to earnings, like price to revenue, forward EV to EBIT, forward EV to revenue, etc. But we also added the earnings quality and the combined credit. So this time, I will not do the mistake that I did back in 2016. I will still keep earnings quality, which is solid, generating cash. And also, since I don't know what may happen with this recession that is coming, I will get combined credit risk. I want to get companies that have a good combined credit risk, again, from our StarMine methodology. So here we rank them according to these two metrics, and we can see, okay, technology looks high, but let's not go there. Let's see that healthcare looks quite good. It has high earnings quality and high combined credit risk. So therefore, I will do my homework more now in healthcare. Of course, when we say healthcare, we mean pharmaceutical, we mean medical equipment, and so forth. We revisit our first data stream chart then, where we had our corona cases and our S&P 500, and we noticed something very strange, that the peak was in February, and then it seems that the pharmaceutical companies tend to rebound because there is obviously investment going there, they have more orders, and a frantic effort now on research on who will be the one to beat corona, the new drug and the new vaccine will be there. This is not enough for us. We need to do a bit more search. That's why we offer a unique database called Healthcare Intelligence, where we can go in great depth and find out, not only for coronavirus case, but for any disease you can put it. So I put COVID-19 infection. So we can find the drugs now that are either launched or are in pre-registration or in clinical phases or in preclinical phases, where all the applied R&D now is being done by the companies. And we can see also who are the parent companies that produce these drugs. So here, if you go here, you can see some well-known names like Roche, like Eli Lilly, like AstraZeneca, Sanofi, etc. So therefore, you say, okay, I saw the automatic way with Barra Optimizer recommending me to buy Lockheed Martin or Otis, but let's do a bit of more homework in pharmaceutical. So therefore, again, using my smart analytics, the credit risk earnings quality, I select the top US companies related with this criteria. So I can see names like Johnson & Johnson, Eli Lilly, and so forth. Therefore, in this manner, our cycle of evaluating investments, monitoring, putting up the portfolio, monitoring the portfolio, identifying the risk, doing scenarios on how to minimize the risk and optimize the portfolio, and going back to our real investment research. For those that also are interested in corporate bonds, yes, there is the capability also to include this type of elements. So therefore, this is in short how a model portfolio that we set up 4 years ago, by selecting some metrics at that time, performed, how you identify the risk, how you optimize and examine your rebalancing effort, and then how you are ready now to do your new moves to increase the quality of your portfolio. With this, I want also to tell you that all these data that we have seen so far are from Icon platform, but all of them, you can get it also from data feeds. So you may want a specific data feed, let's say, for estimates or for earnings quality or for any other analytics. This is possible as well. With that, I would like to conclude my presentation, and I'm open to questions. Hello? Okay, so if we don't have any questions, please feel free to send us your questions via email. We will send you the presentation via email to you. And I would like to introduce you to my colleague, to Mrs. Alrun or Ali Meyer, position sales for investment and advisory. And she will present the several solutions on data feeds for your work. Thank you.
Thank you, Chris. Hello, everybody, and welcome from my side as well. So, yeah, my name is Ali Meyer, and I joined Refinitiv a couple of months ago. And today I have the pleasure to guide you to the pricing services we offer So Chris was all about our desktop solution and our flagship product Icon. But on the other hand, in these days, pricing is also a very valuable service from our side. So as we now experiencing increasing market uncertainty, we all hear about the three key things that portfolio managers should focus on. So assessing, monitoring, communicating portfolio risks. It's all about testing portfolio against market stresses and optimizing portfolios. So with all this in mind, I would like to give you a short overview of what I'm going to show to you. So pricing services, as I mentioned before, with our two kind of flagship products here, the DATASCOPE Select Extraction Platform, and close in combination to that, our evaluated pricing service. Then I would also give you an insight into what other clients are using at the moment, what other users are looking at, to give you also kind of clue what's going on in the markets. Then, of course, I would also like to take you to our universe of our key data sets and our data platforms and the ways to access, and our support, of course, for you to give you the guidance of your special use cases and to help you choosing right solutions for the problems or the challenges that you face. And also a quick introduction into some additional data fields you can access via DATASCOPE Select, and give you also an additional input into evaluating risk, for example, with country risk and entity risk. So with that, I would like to start with a brief overview of our pricing services. So DATASCOPE Select and evaluated pricing service are our major products in getting support for data that you need to meet your regulatory requirements, to evaluate your portfolios and to manage your risks, recalculation of investments, and so on. So the use cases are really there are very many of them. So DATASCOPE Select for that, in that perspective, gives you the ability to tailor-made your data needs, to kind of build your instruments you want to look at and define the data fields that you require in your applications, in your systems, to remodel, reshape your portfolios. So that means it's an on-demand delivery system, fully automatically. As soon as you define your data needs and the fields you want to extract, then it works fully automated and can give you any data at the time that you need and you want. So, but I will in further course, I will give you more details about the DATASCOPE Select Extraction Platform. So this is the one side, and the other side, closely linked to the DATASCOPE Select Extraction Platform, is our evaluated pricing service. So maybe you have also heard about this. We have, how can I say, we have, I think, 4,000 experts, and in addition to that, 180 pricing analysts who are in charge of doing on a daily basis sourcing prices for fixed income instruments. So for that respect, we are facing at the moment really various challenges for especially in the fixed income segment. So for this reason, this is a service which we cannot value and stress enough, that you will really take advantage of it and that you can get access to the experts to help you find the valuated prices for your instruments as well. So some hints as well. They give you extensive global coverage. The delivery is with within 24 hours up to at least in 72 hours, you have your data available. You can get access to the value evaluators directly. So if you have further questions or further challenges, you can get directly into contact with our experts. And the main advantages are also that the valuation methods and the transparency of how they proceed, of how they do their job. This is really something that is market proven and is really a very reliable service for that. So they take, for example, they have kind of access to all data that they need. They have the market contacts, and for sure you can be sure that this is the service that you really need if you need to present the pricing to evaluate as well. So if you need to meet your legal requirements and you need to prove that the pricing is valuable and reliable, you can also use the recipes which are underlying on the evaluation from our evaluated pricing services team. So sorry to mix up a little bit of the slides. So, but you know, for the DATASCOPE Select, I will move further on as well. So yeah, this about the evaluated pricing service as well. So you can see there are many details that flow into the considerations, into getting prices from market, color, new issue market, the transaction, and so on. You really get the best methodologies and transparency in creating this price and getting it delivered to you via the DATASCOPE Select platform. So this is also something that flows directly into your application as soon as you have it available. So with that, I would like to switch to a short poll. So we did this in other webinars as well. So it's interesting to see how you see the sectors in which is the most pricing volatility and the challenges at the moment. So if you're so kind and just give us your view of what's going on in the markets, we're happy to have your vote and then share it all together. So I give you just a couple of time that you can submit your estimation. So maybe that. Just see what happens, if I have received anything from your side. Seems that we have a little bit of a technical problem, but don't worry. I would rather move on. I mean, this is your personal insight, but just to give you an insight what other clients are looking at. So this is a statistic usage of the DATASCOPE Select platform for the asset classes, of course, focusing rather on the fixed income market. So we experience at the moment that people are really looking into the governmental sector and the supranational sector, kind of implied to looking for data from as being considered of safe havens. Also, interest rate swaps are amongst the top 5 most extracted data that we can monitor at the moment. So, and with that, I would like to give you now the overview of our key data sets. So It's, of course, as you can imagine, as one of the biggest market data provider, we basically cover close to everything when it comes to financial market data. So from indices and benchmarks to market data and pricing data, reference data, it's a very big universe that we cover. So, and our job, of course, is to help you to find the optimum way of how to get access to the data and how to be delivered. So we offer everything in a kind of real-time, non-real-time snapshot way and historical time series, which also can be very important if it comes to kind of stress testing portfolio setup. So, for example, if we take now the community investing and advisory, we're now we can think of various use cases. For example, like the portfolio management, that you need the analytics and insights into it, and have a look at fund performances as well. Then to select the delivery option would be perfect for your needs. Also kind of look at our capabilities, in what way we can deliver it and give you the entitlements to use and the rights for the usage of the data. Of course, everything is without saying that we support you as we are a global operating company, that there is no problem in getting access to support 24/7. And of course, everything is relying on our data sources and our core pillars, which is really a very large universe. So with that overview, I will switch now to have a closer look at the DATASCOPE Select platform. So the main point of this offer from our side is that it's a strategic delivery platform for non-streaming content. So it gives you the possibility to extract the data from the content segment that you really need and what you want to focus on. So I don't want to read it out to you, but it covers really from entity data, corporate actions, to the pricing services, into historical pricing, everything that you can require and think of in a very flexible, in a very light way. So from then on, it's really offers you also the flexibility to only pay for the content that you really request. It's working also with an on-demand delivery option, so it's really something that you can really model to fit your needs. The technological features are also very lightweight. It's a cloud service that does not require any installation. It's easily set up, and you can integrate the data feed in any application that you're using at the moment, whether it's SimCorp, Advent, SAP, whatever you are working with, you can decide on how to feed the data into it. The data formats are customizable, and the delivery is also very easily set up to meet your needs. Yeah, so again, flexibility is key. It's automatic. So once it's set up and you decide on what are you really like to look at, whether it's an intraday snapshot of a corporate action, or you want the end of day price for a fixed income, or you want to have the risk-free rate daily delivered into it, so into your system to help you recalculate your exposures, that's easily set up. It's a hosted service once again, so that's no installation required on your side. The delivery is very flexible. You can choose on various repo templates and schedules when you want to have the data ready at your hand. So what is also the key advantage of this platform, you can have the access to our evaluated price services via the DATASCOPE Select platform. You just start a price challenge via the platform, via the hosted web service. So you get access there, you set up your questions, what you want to have to be evaluated, and you push it via the platform, and you can always see in what status your request is in. So, and if the answer is back, you receive as well a notice, and you have it also delivered via the platform. So to make sure that the feeding process is not disturbed, and this works well. So, and to give you also an insight into risk data, what we also offer via DATASCOPE Select, and which is it was a very popular field, as I experienced from a colleague of mine some years ago, but at the moment it's not that popular, but maybe this is something you could also focus on. It's about the entity risk. So DATASCOPE provides you also with a full company structure. If you want to invest in a company and you just want to have a check how big it is, and if there are parent companies, daughter companies, whatever, you can do this via DATASCOPE Select and have the big picture of a company structure. And in addition to that, you can also set up a request for the countries of risk where that company is operating. So this is also delivering you the risk exposure of the country of risk. It delivers you the primary country and then the next 9 other countries, if available or if applicable, that you can have a closer look at where you are going to invest your money and if there is a risk implied with the country the company is sitting in. So this is something that was set up in cooperation with Starmine. So Starmine is not only working via the data, via data feed or the icon. You can also get access to Starmine data via DATASCOPE Select. So this would be kind of one tip from my side. And with that, I would like to kind of close our short overview in our solutions, and also happy if there are any questions or if you want to have a closer look at any solutions that we have in hand. So in our name, it was a pleasure of presenting to you. So I hope that you did not face any technical problems. Just stay a little bit with us. I think there is a short survey at the end of our session. We are happy if you answer us some questions about topic and quality. And yeah, with that, I just can say that yeah, it was a pleasure, and hope you're all healthy and safe, and you get some more insights from our side and tips how to manage your portfolio risks. Thank you. And Chris, do you want also something to say?
Yeah, thank you very much for your interest. And if you have any questions, please send them to us or ask us now, and we will be glad to follow up with each one of you and offer as great details as possible. Testicular.
Well, thank you. Have a great day. Bye.